Hey, hi everyone. Good morning and welcome to our live show. Hope everyone is doing great. Happy Wednesday morning, hump day. But doesn't look like a hump day. It is more of a sell-off day. Cube Gift, Ron, Raghav, Naveen, Naresh, Alex, Bawa. Welcome all. Good to see you. Thanks for joining. So yeah, we are watching our midpoint on Dow Jones, which is now reached. So if midpoint holds, we might get a temporary bounce here in other markets also. However, there's still some room for Russell, ES, and Nasdaq has lot of room to come down, but might need FOMC to get that final flush done on the downside. We are temporary situation here right now. A bounce from the Dow Jones midpoint could give little bit of excitement that buyers are stepping in, but it is just going to be a dead cat bounce. So weakness everywhere right now. All the sectors are in red except for energy, which is in green, up 0.34%. Energy. Everything else, healthcare, financials, technology, semiconductors, all in red. ES has more weakness. ES has more sector weakness as compared to technology and semiconductors. Yeah, because Nasdaq is down 0.72 and ES is down more 0.76. Generally, Nasdaq is the one which will lead ES in terms of selling or buying. So ES little bit ahead in terms of selling. More weakness because of the sector. Less weakness in the semiconductor. It is down just 0.24. Semiconductors are down 0.24. Technology is down 0.4. But if you compare with conventional sector, consumer staple down 1.8, healthcare down 1.36%, consumer discretionary down more than 1%, communication services down 0.76, financials down 0.6. So more weakness in the sector. You can always open some kind of a heat chart to take a look at the overall view of the market like this. You'll see, right, more like some more reds here, right, as compared to reds here, right? Nvidia, you can see, right, almost flat or in fact in green. So yeah, some of these smaller sectors are more red today. So sector weakness, Dow Jones weakness because of healthcare, financials, technology and semiconductors are yet to sell. This is already a lot of selling. No, it can be more selling. You don't know. If Nasdaq, especially semiconductors and tech sells, this is nothing. There's more selling in store. They are not selling yet. They are saving the firepower for FOMC. Blaze, good morning and welcome. Any long or midpoint? So I don't know, guys. This is, as I mentioned, right? Yes, Nasdaq still has a lot of room. I don't intend to go long here. For me to go long, we have to be above 24,920 area. We are at 24,840. We need to rally at least 80 points more, well above 900 area to go long. I don't think I'm planning to go long anywhere here. Below 900, no longs for me. Above 900, I can start thinking. Above 920, for sure, I can go long. Short, yeah, I would not argue with you. Stay short. Bring that guy back to Satya. I made the stream private yesterday. I really lost my cool yesterday. I didn't feel very proud to keep that live stream on. Sorry guys, apologies for others who didn't like my behavior. But I can't take it, guys. I can't take it anymore now. It's after 4 years. If someone is trying to give me shit in the chat, I can't take it. Especially when I'm doing everything right? In terms of, analysis, in terms of strategy, in terms of sizing, in terms of patience, in terms of whatever best I can do, I'm already doing my best. And if I still get shit, I'm not going to take it. And it all began yesterday afternoon already, right? That's where we were yesterday. I don't know. Yeah, we were right over there, right, in the afternoon. You can see, right, crazy expansion in the range has happened since yesterday. The market, I don't know, went up, exploded down. Now, this is where the big moves are happening. And it all started there, right? Late afternoon, it started swinging big, and that's where all the big moves are now happening. In fact, we survived. I told you, right? We survived because of 25k level. God forbid, had we lost that 25k level yesterday afternoon itself, these things which are happening would have happened yesterday itself. Yesterday late afternoon itself, we could have begun this big swing. So anyway, you are starting to see some big moves in this market now. It's okay to have it in once in a while. No, yeah, still, but I as I said, right, I just made that stream private. Not very proud to keep it live on the internet like that. Usually I'm good, right? Behavior wise, 85-90% of the time I'm good. That's what I like to stay with. That is my style. Yesterday I went little bit out of my character. That's not my style. I don't want to be recognized, remembered for such reasons. I want to be remembered, recognized for my analysis, for my levels, for my accuracies, and good behavior. I went beast mode in the Hindi too. That guy, he was really, he came very aggressively in the chat. If he had any points and all, and he got proven wrong right away, right? I showed exactly how we expanded in the range, how the behavior change of the market, especially between 1 to 2, and between 2 to 4 is where you started to see some big swing, and especially that 25k or masters level was the key. If we had lost that level, it would have been more fun in the last power hour 3 to 4, but eventually I voted, right? It is going to finish flat, it is going to chop around 25k. Finish was at 25k yesterday. Yesterday's market finish was at 25,000 4 p.m. Settlement was at 25,015. Yeah, if this market rotates back up, 25,015 will be the number. That is where it will get flat. So anyway, guys, today again we are trading really well these days in terms of market read. I'm very happy. I hope my new paradigm members are also happy. So right now, as I mentioned, right, for me to go long, we have to be above certain area, especially 900, 920 area. That's where I'll consider long. This is all short. Can we bounce here? Of course, we can bounce. We can go to 890. It will be risky long. You can get 890 easily here. If this bounces, it is going to pop into 890, 880 area very quickly. So you have 40 pointer from 840 into 880. It's a long, risky long. Reason again, I just explain you, right? Dow Jones is at the midpoint. That midpoint can reverse. It can cause little bit change in the order flow. But that bounce, if at all it happens, it's going to be a dead cat bounce. Why, right? Like here we were all short. We know, right? If it is a temporary, then let's go for the permanent move. If the or the bigger move, right? If the bigger move is still and could be on the downside, why go for the temporary move? You can short like we did here, right? Short, but it's okay. We got 2 legs down, My thirst for the short is over as of now. This is the one we didn't wanted to miss out. This into this area, we got that. This is a bonus now. Stay short if you are short, but don't go long. I wouldn't go long here. Would wait. I would wait, let it go into 890, 880 area, and if it rejects, I might just short it. That's the easier trade to execute. ES is problem. ES is a big problem, guys. ES is in trouble today. Session lows on financials. Dow making new lows. Excuse me. When this loses 800, it is going to fast fall into 600, 800 area. Yeah, so the only problem here with the Nasdaq is, we have FOMC and Nasdaq is still the strongest of all in terms of our midpoint retracement. Dow is obviously already at the midpoint. Next two candidates are Russell and ES. And ES comparatively has more weakness this morning. Afternoon, again, things can change by afternoon with the FOMC. Especially, right, who is going to get impacted more because of summary of economic projections or more rate cut or less rate cut. Two players, Russell and Nasdaq. They are the one who are more sensitive to rate cuts or rate not cut decisions. So those weakness in Russell and Nasdaq will need to wait. Again, guys, sorry. I'm giving a lot of future projections. I promise I'll not do that. But yeah, I think right now, let's talk the current state of the market. I read, right? Let's talk facts. Right now, as I mentioned, right, sector has more weakness. Semiconductors are barely down. It can almost turn green. Semiconductor is down 0.15%. As we speak, Nvidia is in green. So there's the tell, right? It is not a lot of weakness in the tech world or the semiconductor world right now. Technology sector is down 0.4. But the major things which are down is healthcare, down 1.3%. Financials down 0.7%. So more weakness, consumer staple down 1.8%. So more weakness in the ES. Yeah, it is following the sequence. Dow Jones first because of those sector. Dow has an important healthcare and financials component in it, in the top weightage of the Dow. Home Depot, I don't know, Visa is down 2.5%, Microsoft down 1%. Yeah, it's going to play out eventually. I agree with you. Eventually, yeah, the weakness is going to see. That's how it works, guys, in the market. This buying and selling, it works in the cycles. So first they target something which is already weak. Right now the weakness is in Dow, the weakness is in Russell, the weakness is in ES. That's why Dow is targeted first. ES is the next in line because the similar sectors which impact Dow also impact ES. Then why is ES not already down into this zone? Because ES also has technology and semiconductor. They are preventing from this low to be taken out. So eventually, ES, if it gives up the ghost, which means the sectors are taken care. Now it's the turn of technology and semiconductor to be targeted. And once they begin, this is where real fear will be felt. This is where even Nasdaq could be candidate for that sell off, another 200 300 point more. This is where this VIX, which is just here, we could see VIX here by this today afternoon. We could be here on the VIX by today afternoon. So that it takes turns. First, whoever is weak, let's sell them. If something is already taken behind barn, short once, short twice, then they try to find something else which is still in hiding, which is still not yet taken behind the barn, right? Then they target that sector. So that's how selling works. It comes in cycles. Right now the cycle is not for tech and semiconductors. It is going to come. Bounce time. I don't think so, but let's see. I can watch. If I don't agree, I don't join. I can watch. About 900, if we close 920 and above candle, I am interested in the long. Otherwise, this is too weak bounce to participate. Yeah, guys, don't wait on me. If you feel it is long, go for it. Hope it goes. It can go up to 900, 920. I don't want to take that long. Yeah, if there is a rejection 920, 900, wherever I see a rejection, I might short it. That will be my preferred choice of direction and setup to trade or enter a trade. Top of the hour. Yes. So semiconductors are back to green. I told you, right? Nvidia is in green. Nvidia rallied 0.6% up now. Semiconductor sector is back in green. Technology sector is back in green. So there was an element of strength in the semiconductors and technology. 920, 930 area was our preferred destination. We are at that destination right now, and I'm waiting to see if it rejects. If it rejects, I have no problem adding more, bringing or sizing this trade a little bit more bigger. But yeah, if we are holding 920, 930 area, I am okay to lose this trade. Let it hit my stop loss. Yeah, starting to see some rejection, but we need a red candle, closing red candle to confirm the weakness. Yeah, I think we are good. Yeah, we got one red closing candle, so should be okay now. Mhm. Why? Yeah. Can't MSL reject again? Reject and send it back down into 91, 891. Which means there's one more push remaining. It's the ATM strategy. 9 buy here. I'm 9 short. So if 4 get exited, I'll be short 5 contracts. So this will automatically adjust. It will, whatever is the remaining size, final size, it will keep updating. It is automatically done by the platform. But as I keep exiting more, right? Let's say by this time I'll have only 2 contracts short. This will automatically get adjusted to 2 contract buy. That is a ATM strategy in Ninja Trader. Let's say here, if it flushes, it takes out those 4 contract, 1 contract, 2 contract. I should be out 7 contracts here. So it will adjust 9 minus 7 to 2 automatically. That's the good part about the platform. So let's say now, if it exit, there you go, exited few contract. This 9 got adjusted to 4 because I am 4 short. If I exit 2 more here, it will automatically get adjusted to 2. There you go, 2. If I exit 1 here, the final 1 contract will automatically get adjusted to 1. Look at that stop loss. It is also getting automatically adjusted from 9 adjusted to 2. If one more exits here, 1 contract short, 1 stop loss and 1 take profit will get automatically adjusted. They use the automated strategies, guys, for managing stop losses, take profit. There you go. And final 1 runner we got now. We have no expectations here. Do whatever you want. Whatever you want. Really, you'll do whatever you want. Yes, I'll do whatever I want. I can do some madness here in this trade. Hit the like button, guys. Hit the like button. Good analysis. I told you, right? 920 maximum. That is what has happened here. I said, right? I would let easier trade for me instead of taking that difficult long, risky long, breakout long. I would let it pop into 900, 920, 930 maximum. Seeing a sign of rejection, I'll get short. I followed my plan. The plan worked. Here's the runner. Sit back, relax, enjoy the ride now. Ask questions. I'm available. Just don't ask me what is going to happen in next 2 hours. I tried to do that yesterday and got trolled. Eventually, it did happen. What I said would happen, but don't ask me today. I have no interest in entertaining that question. What about next 30 minutes? Don't talk about next 2 hours, next 30 minutes. No, man, I'm done. As I said, right, there's a big skills gap. And if I try to go in that detail, people are people only like higher highs and lower lows. People like to hear patterns. People like to hear demand and supply. People like to hear trend lines. People like to hear there is a weakness, there is a strength. Let's keep it simple. Don't complicate our relationship here. So yeah, guys, this is what I said, right? At max, I'm expecting this to go to 900, 920. I mean, instead of taking the difficult long, this is the easier. Short is going to be easier, I said, right? Short is going to be easier, and it is playing out eventually now. I still don't know if it is completely going to sell off, but it's a runner, guys. No expectations on this. Bounce point coming for some products here. We might get a reaction bounce here. Gold hit our weekly expected move lower edge to the perfection. It that is the maximum what we planned for gold this week. It has hit our edge and it is getting a reaction. The reason you are bouncing on gold is because this is our weekly low. It hit perfectly and got a reactionary bounce. It might start hugging using that level as a today's pivot. 4850 is your number. Remember, if we lose, retest, reject that area, more downside could come in the market. You want to hold anyhow 850 area. You cannot lose 4850. It will be nightmare for this week. It could double this entire move on the downside if we lose 850. Yeah, very very bearish gold. 850 is your area to watch. That was the area to watch I gave my members over the weekend itself, that if we sell off, this will be the low this week on the gold. We have hit that. It is going to use that level, sometimes above it, sometimes maybe below it, sometimes above it. So it is starting to use and going to use 850 for some time now. What is this sharp move? Is this a reversal move? I don't think so. Graham, yeah, I mean, even I was looking for that move yesterday itself, but it happened today. Good job, congratulations. Yeah, if you are in green, guys, stop trading. Don't risk afternoon session, especially with FOMC. Things can get crazier. I'm also in the strong green. All these trades. RDGD change the name to GDGD. No more red days. Yeah, no red accounts. I can share any. Right, for me, no red accounts today. Everything is in green. All green today. No red at all. There was no red yesterday also. I don't know what was the reason to troll me. There was no red for many days now. So you see, right? First you troll or you talk shit if someone is losing, and if they're not losing, somehow start shitting on their analysis. I mean, such a low life, people. Either they must see someone losing. If they are not seeing someone losing, they need to find some reason, right? Some reason to shit on them. That was silly yesterday. Yeah, if let's say my analysis was bad, if I lost trade, if I was completely wrong in calling the short or long, then you have good reason, right? You're talking this didn't happen. It's in fact completely opposite which happened. Yeah, be my guest. Yeah, let's not get started again, right? ARL. Let's focus on market. So markets are still bearish. I clearly told you, right? I am interested in long, but you give me market which is closing candles above 920, 930. You barely stayed above 920 for brief moment. In fact, I added more. Seeing those rejection, I added few more lots on that short which I was initially in. I added few more and got this flush. Is it enough? This down movement enough to make a new low? No, I don't know. Semiconductors are still in green. It's not about tech. Someone mentioned, right? They are looking for a down movement, big down movement. I said you might have to wait until FOMC, not before the FOMC. At least not in the Nasdaq. There is a strength in the semiconductor. It is in green. There is strength in the technology. It is basically flat right now. Nvidia is in green right now. So there is not overall weakness in the tech. It is more about sector weakness in this morning session. Things could change in the later half with the FOMC interest rate decision, economic summary projection for the future rate cuts. Things can drastically change, especially for Russell and Nasdaq. They are more sensitive to interest rate hikes or interest rate cut, which is planned and not happening. They will react negatively. Nasdaq and Russell. And the bounce we knew is going to happen. I even showed you the reason why it will bounce. It is because of our Dow midpoint. We got a little bit of excitement, but it is going to be a dead cat bounce. That's what I said. It is back to that midpoint one more time. And if it loses that midpoint, more selling can come in the market. We'll have next few charts which will track Russell ES especially, which could go into their midpoint and which still has room on the downside. So yeah, new low can happen. It's touch and go in this area. The volume is dropping as the day progresses. We are 11:30. The volume has dropped. Morning trades are much easier, much faster. As the day progresses, volume drops. Trades can take really long to play out. So Nasdaq can go flat, guys. Nasdaq, it's possible. Nasdaq can turn back to green. It is possible because I keep repeating. Nvidia is in green. Google just turned green now. Semiconductors are in green. Technology sector is flat. It is still more about sector weakness, Dow Jones, ES weakness, less about Nasdaq or tech weakness. Meta is the next candidate, which is about to turn green. Meta hits session high. Meta turns green. Meta fills grab. Next in line are Tesla, Broadcom, Apple, Microsoft are down most today, down 0.8 and 0.84 respectively, Apple and Microsoft. Apart from those two big tech, others are fine. It's not right now. Tech is not very negative. It can get negative in the afternoon, but right now it is not about tech. Yeah, if you are in green, yeah, I mean things can get little crazy and nasty in the afternoon for the FOMC. Even if overall move is going to be down, but temporarily it will rapidly move up, squeeze all the short, frustrate them, and then eventually maybe when Powell stops talking at the end of the day into the after hour, it can sell off or vice versa. So things can be really drastic, especially around that interest rate decision announcement and Powell's press conference. Yeah, we'll be here. I'll be here until 3:30. I think my daughter has a class today, so I'll need to take an excuse to go drop her at 3:20, 3:15. So I'm there at least until 3:15 p.m. Eastern. I'll be there. Yeah, it is not. It is not good during the FOMC. It is crazy. The extreme moves or the stop loss hunting moves are more. Yeah, right now, tech, as I mentioned, right, keep your eye on the technology. Google is in green, Nvidia is in green, Meta, we just saw right, briefly turned green, back to red now. Tech is trying to put some recovery here, and whenever Nasdaq is trying to recover, like here, constantly we can see right, knocking at 900, 920 area now. It might eventually make a push for the VWAP and get flat. 25,015 would be the number. 25,015 can happen for Nasdaq. Why are you not long? I don't know, guys. I'm not. I don't want, I don't want to entertain breakouts right now. Especially in the downtrend, breakouts are a bit risky. When we are coming from a strong downtrend, I don't know. Here it doesn't look like, but if you zoom out, it's still a strong downtrend, right? The problem with the breakout here, that we break out and go get that 25k, it looks very good, but the moment you lose the breakout and it fails, it quickly rotates all the way into the bottom end of the range, and it is a very nasty and quick sell, like here, a very quick and nasty sell. The breakouts are risky, and as the time right now is not good, right? It is already 11:30. In fact, about to get lunchtime, it will be more difficult to get that breakout. It might fail couple of more times before it eventually goes into that 25k 15 area. Are you with us for FOMC? Yes. Until 3, I should be there until 3:15. Yeah, it is a big box as of now. Here especially you'll be able to see, I don't know. So long or short, no way I'm looking for long, even though it might happen. I prefer missing that long, because the risk, as I mentioned, right? You fail to get that breakout, it is going to simply dump into the bottom end of the range, 860 850 area, 950 930. So 100-point range, 850 to 950 930. 930 80 point, not 100-point, it's 80-point range as of now. 930 at the top, 860 at the bottom. ES weakness, sector weakness. So are we shorting? It's going to chop. You'll have to scalp. It will be a quick scalp and it might again flush back up. Risky, guys. No long. It's very risky. I told you, right? They will show that it is strong. It will show the sign of breakout, and the moment you miss the hit, they are going to rotate all the way back into the bottom end of the range. Well, you did not take the trade. It's okay, man. Like, it's okay. I'm not like here to take each and every single move. I made my money. At least I gave you good analysis. You didn't take the trade. The motivation is not there. For what? Well, you have us as the viewers. Yeah. Don't worry, we'll trade. Okay, for the viewers, we'll trade more. We have FOMC. We have lot of price action still left, guys. But avoiding that long was good call there. It is not yet ready to break out. There will be a lot of drama before it is ready to break. Somebody needs to get hurt. Like, some shots need to get trapped, and their stop losses must be used to squeeze them into that area. There has to be some drama which will happen before the eventual breakout will happen. But without your tape reading, I may piss off myself with those sharp pullbacks. Yeah, I know my read is really good, and it is very important that I don't like overdo it, right? In terms of execution or trade, right? Don't try to take each and every single move, right? Your confidence gets hit when you have losing trade. So yeah, if you're winning, making profit, just go for the best of the best, right? Like breakout long was seriously a risk here. It's not going to give it so easily that you are in the strong downtrend and you take the breakout and you'll get the view up. It doesn't work like that. It certainly does not work in the Nasdaq world. The way it works in the Nasdaq world is they first give you an impression of a huge sell off and you get full on board with that short. You feel FOMO, you jump into the short, throw everything, try to get short. They trap you and then they run through your stop losses. You average down more. They keep squeezing you, they don't stop, and that's how they hit that number. That is how the breakout works in the Nasdaq world. You need to be at the receiving end. Then the breakout will happen. So without drama, it's not going to break out like that. Somebody needs to get hurt. I want a t-shirt that says that. Yeah, we have established some good sayings, right? Even though my English is not that good, but we have coined some good terms and sayings in the market now. Look for any short traps. Shorts must get trapped for market to make or break out on the upside. Yeah, so this will certainly give the direction, Graham. After the FOMC, market will have clarity because you can see that with the war, it is okay, it is surviving. It is only the oil which is having some wild, moves happening in that market. But yes, Nasdaq, they are surviving. They are. It's not a direct impact for American big tech companies because of the war. They are surviving, right? It's a war or no war, they are going sideways. They were already here. They have been here for last 6 months. What war? It doesn't move needle for the big tech or the even S&P 500. Even though it has energy sector and oil in it, why it is trending down? So if there is a war, if the crude oil is pumping, crude oil is pumping like this, energy sector is rallying like this, like a big tech. You look at that energy sector. Why is S&P down? Why is S&P down? You see, the math doesn't work like that in the indexes. It doesn't move a needle. This war situation for Nasdaq and yes, it's because of the big tech. They don't have any impact. They have big say in the indexes and their price action. That's why I'm saying, right, today someone who is really getting bearish on the Nasdaq, you may not get that big move in the Nasdaq today because tech is doing fine. Semiconductors are in green, technology is flat, Nvidia is in green, Google Meta always keeps going back to green, red, green. Tech is fine. And that's why I'm content with my shorts. I got one big flush here short. We got this short here on the live stream with you guys. So I'm content with two great short trades. Breakouts, again, without a drama, they are not going to happen. Here's another drama which is in progress. Look at that. They put some huge sell candles. Shorts, they got excited and they were trapped. They squeezed them up. The real squeeze begins if they put the second leg up. That's where the real breakout will happen. They have to keep hurting that candidate who is locked. Shorts are locked here, but if this rotate back, then it is a range. Yeah, if the next leg up comes, that is where the real pain begins for the short. So am I going to bet on that second leg up? I don't know. I don't think so. Why? I'm not interested in the breakout anyways. Why I will bet? I don't care. Even if it breaks out, I'll watch. I'll let it go into the VWAP. It rotates back down. So no harm done yet to any party. Nobody was hurt. Nobody was hurt here. Both made money. So the drama continues, right? This is, I don't know, this can continue for some more time. So have they trapped long? We'll know it. There has to be second leg, right? Somebody like here, the longs, they got excited. Now they did a rug pull. If there's another leg down, then that's where, longs are hurting. A lot of drama will happen here before the eventual break, either on up or downside will happen. Nasdaq is not that easy, guys. It's not that easy to crack. Oh, excuse me. Look at that drama. Oh. So yeah, eventually it is going to break. We just don't know on which rotation. This is like 1, 2, 3, 4, fifth, almost sixth rotation. Trying to break out on the upside. 25,000 is the destination. 25,015 is the exact number it is trying to get to. How about the VWAP? Yeah, VWAP could be the pause point. Which rotation? This rotation? I doubt. But it is there. It is breaking out. Yeah, that's how they give the impression that they're breaking out, and then they do a rug pull. Look, it is strong. It is going to break out. I'm scared. Have a stop loss if you're scared. Trade smaller size if you're scared. There goes that breakout begging. Nasdaq will just hand you over like that, guys. Just like that. It will show that it is going up. You sit in that long and you get the rocket. It is that simple, right? Trading. How difficult it could be, right? Don't go long. Oh, excuse me. So there are some buying happening in the ES. You can see, right, some big lots getting bought in ES. Nasdaq still has sellers. So still might range because of those rotations we are seeing, right? Strength in some sectors and ES, weakness in Nasdaq. There is a rotation going on between now different sectors and tech taking turn. A slight or more weakness in tech right now as compared to ES or the sectors. Excuse me. So let me go grab my food. I'll be back in 2 minutes. I'm back with my food, but I'll be on mute for next few minutes while I finish my lunch. I don't plan to go long here right now. We rotated back to the top end of the range. It is still ranging. Yeah, for sure. One of the instance, it is going to break out, but good luck guessing the number. One, two, I don't know, three, four, five, six, seven attempts have already been made to break out. 2:30 p.m. Jerome Powell press conference is at 2:30 p.m. Eastern, 1:30 Central. Well, welcome back, Lance. Thanks for joining us. Yeah, guys. Market. I think it's still waiting on FOMC to make a decision to go back to being green or big red. 12:25. Yeah, FOMC is at 2 o'clock. Interest rate decision. I think the estimates are no rate cuts or rate stays same. But yeah, very interesting. The press conference is the last meeting, right, for Powell. Hmm? Current 18th March, yeah, 98.9% probability, no change. In fact, 1% probability of rate hike actually. But I don't think they are going to freak the market by raising rate. There is 1.1% probability they raise rate. But yeah, rate cut, no rate cut, or stay same, 98.9% probability, no rate cut will happen. Next meeting, 2% probability of rate cut, 1% probability of rate hike, 96% probability no rate cut even in the next meeting in April. June is where I think some real probability starts, 17% probability of one rate cut. July, 30% probability of rate cut can happen if not in June. September, almost 50% probability, 43% probability rate cut will happen in September. So it's most likely September, which market is pricing in. Today they will get the dot plot or the summary of economic projection, which should give clarity to the market. So yeah, market should get a direction here today. Where it is headed? Are we going to flush and go much lower? Especially this 6 month of consolidation, it's coiling, and keeps coiling market. It's going sideways, creating open interest, calls and puts being bought and sold at the same level. Giant ball of risk is going to explode. Yeah, guys, market wants some clarity what is going to happen, especially with this inflation and this war. I think has again left the market in limbo. That's why you're not seeing those punchy market, right? Which recovers, does the V-shaped recovery, takes out the overnight lows, overnight highs. Because this uncertainty is not good for the market. Market likes clarity. Market wants clean moves, clean direction. What is going to happen with the Fed economic policies? What is going to happen with war? What is going to happen with oil? What is going to happen with inflation? Job, to be honest, they don't care much. Administrative policy, interest rate, they can really easily quickly fix the job market. That's why Fed themselves, they are not worried. They let the unemployment rate rise as long as the inflation is under control. I think job is their second priority. Although they say they have dual mandate of job as well as inflation, I think they still first care about inflation. As I said, right, there's actually a probability. Even why should it be even 1%? There's 1.1% probability of rate hike. Oh my goodness! Even if it happens, let's say by mistake, by chance, whatever. Like, to get back to Trump, Fed raises 125 basis point. This market is going to explode towards the downside. Don't go long, guys. Weakness. Amazon hitting new session lows. Weakness in tech. Yeah, nothing happening here. Market is in tight range. But yeah, long are risky here. There's a weakness in the tech. Apple hitting new session lows. So it's just going to be, small, sharp scalp. Nothing is happening actually. If possible, avoid trading because Obviously, the risk is it can pop on the upside. Since we are not dropping, that is the only reason it will go up. Since the market is not making new low, only for those reasons it will go back up. But there's, I think it's the FOMC which is going to give the clarity to the market. You can see that the range is very tight here. Even if you get a winner here, oh my god, some news came. Anyway, we took profit there. Is that okay? I switched off the news. Let me switch on the news. There's something happening for sure. Yeah, guys, it's dumping. Big tech is dumping. Amazon hit the new lows. Communication services, consumer discretionary sectors weak, ES weak, Nasdaq weak. Everything coming along now. There's a weakness across the board. Don't go long. Mm-hmm. There's no news, just technicals. Weakness and new lows, as I mentioned, right, in a couple of
Saudi
stocks.
Arabia now saying the danger has passed in Riyadh city. No confirmation whether any energy infrastructure has been hit.
Mhm. Weakness in tech, weakness in Nasdaq. It will be tight, small scalps. I mean, that was a lucky. We got that one leg. Second leg obviously was we missed, but it was a lucky. Some news we missed news on that occasion. But right now, long, no way. I'm not touching this right now. After FOMC, yeah, things can change. We can be very bullish after FOMC. But until FOMC, I think there's a still down pressure. $819 is the $811 is the low, right? Previous low is $811. So there are some buyers in the ES. You can see in the bottom graph here or tape. Some buy orders going through for ES. Nasdaq still has more sell. So it is just rotating between this and that. Waiting for the FOMC. I think it's only after 2:30 we'll see a directional move. We might make a new low. We are so close to making new low here in Nasdaq. Previous low is here at 811, I think. 75 is the previous low. We are already at 840, 830. It might capture a new low, but yeah, more wait for the FOMC for the directional move. It is directional. It is not directional. Nasdaq has not even begin selling yet. Nasdaq is down 0.64. ES down 0.66. Russell down 0.72. Dow Jones down 0.94. So Nasdaq is the least in terms of sell as compared to ES, Russell, Dow. If Nasdaq decides to sell, it is going to be a lot of fun. It could be good 1.5%, 2% kind of a down move. But I think most likely it will do is go green, go flat, fill the gap, do nothing. No rate change, no rate cut. Powell doesn't give a bite to media, just like he's always, right? Avoid any controversial statements. stick to the agenda he has, and market fluctuates and there is no event kind of a FOMC. Nasdaq might make a new low. Be careful. I'll be back in 2 minutes, guys. So yeah, I don't want to take a trade. I think here, market is ranging here. In fact, might start to range in this area as it was ranging here before in the previous hour. Going into FOMC, this might range between 890 all the way till 840. Back in 2 minutes. So yeah, another new low in Nasdaq. Told you right, Nasdaq might make a new low. Now it's turn for ES to make another new low. In fact, ES also already made a new low. No, it didn't. 719 was the previous low. It came close, so it's now ES's turn to make another new low. But look at that red you have in the Nasdaq versus ES, which has some greens. All Apex payouts are good and consistent. Yes, in fact, Apex has significantly eased the criteria now to make the payouts. How? First of all, they have now removed any checks or the reviews they were doing. So no more, no more denial of payout, no payout denials, no MEA rule. Meaning, previously they had this rule like if you take more than 30% drawdown of your overall drawdown room, like for a 50k account you have 2500 drawdown room, 30% of 2500 is $750. So in any one single trade, if you lose more than $750, you break this rule and the payout could be denied. But now they removed this rule, which means you can use complete drawdown room 2500 for every single trade, no restrictions on that. Previously they recommended have at least 5:1 risk to reward. Now they are not going to check that as well. Previously they had 30% consistency, now they increased it to 50% consistency. Only 2 profitable day, trade at least 2 days before you request a payout. So yeah, very very relaxed and better. And they also have end of the day drawdown type. I like them because even if you hit your daily loss limit, you don't lose the account. Your position gets liquidated, you come back and start trading again next day. So yeah, some good welcome changes from Apex. Obviously I'm trading all 20 accounts with them. Not all are funded, couple of them, most of them are funded, some of them are still in evaluation. Yeah, hoping one of the goal this year is to receive payout from all 20 accounts. I have max received payout from 12 account or 13 account. Hopefully this year I'll have account all the 20 accounts. I'm trading in the set, that is the reason why. Anytime I trade 3 or 4 account in one set. So that's why even if they make it to the payout, only one set or two set will make it to the payout. And sometimes the good part is if I lose, I don't blow all the accounts. I lose a set, 3 or 4 account. No, 150k. Mostly I trade 150k. I do have one or two 50ks which has buffer in them, but yeah, mostly I prefer 150k. Trailing account have the same rule? Yes, you can use the full drawdown rule. 100k rhythmic intraday trail, which means it is live trailing. 100k rhythmic end of the day trail means it is end of the day drawdown. Live trailing, I am sure you know live trailing versus end of the day by now. That is very common. If not, I think I used to have a video. Let me see if I can share. Exclamation drawdown. I have a video explaining that. What is live trailing versus end of the day. Yeah, there's not yet, right? There's the link. Live trailing versus end of the day drawdown rule explained. You can watch that video. After you have already purchased, I don't think you can change. So just trade, follow the rules, read the rules of live trailing. It's not that bad actually. Live trailing gives you full access. In end of the day, you at least only get half of your drawdown
US
room
Ford CEO says it's
every
too
day.
soon to say if Iran was affecting consumer demand in the US.
Live trailing gives you full access to drawdown, but live trailing you have to always book the highest profit. If you have profit, you did not take the full profit, it retraces back to your
Ford
entry, you
CEO
lose
adds
that
that
drawdown
Iran
room.
war has not yet affected Ford's supply chain.
Anyway, guys, new session lows. I don't think they will be able to revert it because it's already purchased. Maybe they can.
According to the information,
So try
Coinbase
sending a
plans
ticket. Maybe they
infrastructure
can.
for AI agent payments.
So yeah, guys, I clearly warned you not to go long. This market is weak, consistently looking to make some new lows. New lows printed on Nasdaq. New lows printed on ES. Dow Jones about to print a new low. There is problem in this market right now. Could it be a double bottom? I don't know. People like it. People want to buy double bottom. I don't want to buy double bottom here.
UK's Chancellor Reeve, speaking in a Madrid press conference, says UK defence investment plan is being kept under review.
New lows, guys, everywhere. Dow, ES, Nasdaq, new lows. Russell is the only one which is not making a new low here right now. just divide by at least 4 days, whatever is your amount. 1500, what is the drawdown room you have? 1500 or 1250? Just divide by 4. You should at least lose an account in 4 days. That's what I try to do, at least on paper. I have that in mind, that I should not lose or blow an account in one single day. 2, 3 or 4 days minimum you should be able to survive. Whatever is the drawdown room, divide by 4. At least restrict yourself daily loss to that amount. If it is $1250, divided by 4, it should be $300 per day minimum. You lose $300, you stop trading for that day on that account. Is 100 point, is it possible? Yeah, well, it is possible. On the downside, I mean, we are already down right now. ES is down more today than Nasdaq, but good 30-35 points on the downside from current level. And on the upside, yeah, possible guys. 100 point move is possible. Depend on what Fed says. It can move up 100 points. Why not? It knows how to climb. The good thing is it has already been there 100 points above this week on the upside. So it already knows how to get there. If it was already there, it can get back there one more time. Why not? But yeah, since it is down on the downside, yeah, 30 points more, 35 points more. On the upside, anything can happen. Never say never. But knowing Powell, and at least this is the last meeting, right? I don't think he's going to create any drama or any sudden surprises or shocking comments or any shocking decision. Is not generally. It is not Powell's style to do such things. So what then? 35 point up, 35 point down. I think that is most likely outcome. On the upper end, I think 6,760 area. So 40 points up. Yeah, 40 points up or 40 point down. I think that is the very logical thing market might do. Either 40 points down or 40 point up on ES. Weakness coming back in tech. I'll just trade one micro right now. We are waiting for the FOMC. I don't want to trade size and risk anything at this point. And it is just going to be scalping, guys. It is not going to be. I should already be out here. 5, 6, 7 points. I should be out. You are not going to get, as ahead of the FOMC. Yeah, this was lucky to get 10 point. Yeah, at least don't go long. ES just printed a new low. Never tried 25k, even 1500 drawdown rule feels so less. Yeah, so that's why I generally see the market in the points. You generally see, right? I don't see my PNL here, right? PNL, like I'm trading micro. I don't know if you notice, guys, I have been trading micro for more than a week now. But do you see me like going really crazy with the micros, like abusing the micros? I don't think you notice me doing that, right? I still trade very tactically with the stop losses. I do scale in and scale out, mostly scale out more than scale in, but yeah, it is giving you a flexibility, so I'm using it. But you don't see me like creating or devising a strategy that I'll buy here, then I'll add here more, then I'll add more, then I'll add more, and somehow I'll get break even and a winner.
Saudi
and if I'm
Arabia
lucky,
says they
it will win.
intercepted 4 ballistic missiles launched towards Riyadh.
Like here, mostly like I was short here, right? I already had a winner here. It won. I took most of them out. I left a few runner. It quickly went back up, but it was the same trade, right, which I had booked profit on, and it was here I added more, and then eventually I exited here. So overall, I'm still looking for this to rotate back in, but I never planned that I will short here. I'll keep on adding like that. I don't trade like that. So what's the point is, mostly you'll see me checking the points, right? How many points this spread is down, right? Up to 40-50 point. I mean, that's normal. You're trading a $25,000 product. 50 point, I think it's no big deal in Nasdaq these days. It was a big deal when it used to be a $14,000 product. At $25,000 or $24,800, 50 point means nothing in Nasdaq. One candle, you can see right here, from the high 852, the low here is 827. 1 point candle itself in a 500 or 400 tick could be 30 pointer candle. So if you don't have room for 2 candle, I mean, don't trade Nasdaq. One candle can be easily 25-30 points. So if you don't have appetite for 2 candles against you, I cannot time the perfect high and the perfect low each time in each candle. Not possible for me. So yeah, at least look in terms of points. So $300 is a good risk if you are trading 2 micros. You have good 75 points you can lose with 2 micros, and you will still lose $300 only. So if you are generally
Saudi
losing
Arabia
50-60
says
points as a
assessment
stop
indicates
loss,
there is no damage or injuries in Riyadh City.
so you can have 2 losing trade with 1 micro. So it really depend, guys. All this, to be honest, this discussion are rubbish. Risk to reward, and all. Important, what is your strategy? If you have a strategy, then you'll risk management is the secondary thing, right? You'll manage your risk. You can size accordingly. You can trade micro. You can trade 1 micro. But are you going to win with that strategy? I think initially that's where this risk to reward discussion comes when you are at that stage, at level 3, level 4. So try to work on the strategy first. If your strategy is good, then risk to reward can be optimized. Initially you may, as I mentioned, right, now I'm trying to lose account in 4 days, but in first year, is it possible? No. You lose account in 1 day or 2 days also. But yeah, it's good. It can be done hand in hand. So that's what I recommend, right? You use the drawdown room at least for 4 days. Don't lose it in 1 day. Because what happens in those 4 days, even if you are losing, right, you're still checking the reason why you failed. What were you thinking for that long? What were you thinking while shorting the market? What was the reason you went? Okay, this was the reason, it didn't work. So next day you try again, you fail again. Third day you try again, you fail again. So nobody makes payout in their first account or first few months of trading. To make the payout, you have to be really good for a consistent period of time, right? At least 2 weeks, 3 weeks, because 1 week to pass, 1 week to receive funded account and start trading. Second week you make some progress and receive or submit the payout. Third week you will most probably get your payout. So you need good 2-3 weeks of consistent trading, and that can only come when you have a good strategy which you have tested. First paper traded, then maybe traded with the smaller size, and then finally if you are using little bigger size, then that's where the risk to reward discussion is very important. If you are trading size, are you taking timely stop losses? If you're trading 1 micro, having little wider stop loss but still perfecting your strategy is what I would recommend. Use wider stop loss, smaller size initially. It takes time, really long time to get to that stage where you are really optimizing every single trade for risk to reward. New traders, it is good on the paper, it is good for the planning purposes. The moment they put a single trade, it is going to hit them in their face. with the drawdown. Yeah, it is there. It can be worked hand in hand, but first also work on perfecting your craft or strategy or whatever you are thinking. Paper trade it initially, and then all these questions are ironed out. You know what is the risk here, what is the risk there. You always know. Like here, like the way I was excited in the morning for the shorts, like over here, and I think this one is what we got again, a good short trade like this we were talking about, right? This one we completely got full short. This and this we got short. Here and there we have got short, but I'm bit, we can see, right, trading 1 micro, 2 micro, because there is a risk. Now we are down, maybe they rally. We know 25,000 will happen at some point with FOMC, with announcement or some news, some squeeze. It is going to go into 25k. So yeah, why risk big size here when you already got some good short trade? Even if I can win, it's risky. Anyway, guys, approaching 2 p.m. market starting to make a move on the upside. First time, it is now starting to look little better now. Especially we have got some new lows. I was talking about Russell, except Russell, Dow, ES, Nasdaq, everything made a new low. So it has little bit of clarity. What clarity? I mean, at least it grabbed the stop losses, right? If it was coming down to make a new low, which means it came down to take out whoever went long here, right? At least those are now stopped out. It's a fresh set of buyers after hitting stop losses. I use Replicanto from Flowbots. I'm not aware. I think Trader Sync or something was I had heard of long ago. I don't know across platform. I use Replicanto. It is good for multiple accounts within one platform, especially through Ninja. But if you can log in with Tradovate account, multiple Tradovate account, Ninja Trader for Tradovate, I think the same copier can be used for multiple platforms. That's what people generally do. So it's not the feature of Replicando. Replicando can copy any number of accounts, whether it is from Apex, Bullnox. But the question is, can you log in with multiple prop firms in NinjaTrader? I think if you have multiple licenses, as I mentioned, right? If you download the NinjaTrader for prop firm and log in with the Tradeovate account login, so it does allow you to log in multiple accounts. So in the same NinjaTrader, selecting Tradeovate, you'll be able to log in multiple account, multi-broker license, right? Basically. So as long as your accounts are there, you are logged in with 2-3 broker in one platform. Replicando, it doesn't care, right? Whether it is coming from Apex or Bullnox or Profit Trader, it will just enable the green light, copy. But you must be logged into all the account at the same time. That is what you want. Multi-broker license and NinjaTrader for Propcom or NinjaTrader for Tradeovate. Because rhythmic, even rhythmic multi-broker license will let you log into 2 or 3 rhythmic accounts at same time. But you got to pay for it.
About 15-30 minutes time we get the Fed interest rate decision forecast for no change. Just going to go through a little bit of commentary. Barclays, they say the FOMC is expected to keep the Fed funds rate unchanged, reflecting elevated uncertainty consistent with recent comments that policy is really in a good place. At least 2 dovish descents are expected, with some risk of a third. The updated SEP will likely show higher inflation and to a lesser extent stronger GDP for 2026, while leaving the unemployment path unchanged. The median dots are still expected to show 125 basis point cut this year and one in next year, but no change in 2028, and a longer run rate of 3%. At the press conference, Powell is expected to repeat that the Fed can afford to be patient. Geopolitical developments will likely be highlighted as a source of added inflation pressures and weak economic activity. But broader message should remain that policy is well positioned to manage risks on both sides of the dual mandate, and the decisions will continue to be made meeting by meeting.
Yeah, not. I think shorts can be avoided now. Like here in this direction, right? We are clearly saying, right, avoid the longs. Now I can tell, right? At least we have moved away from that low, starting to look better. So commentary changes, right? Avoid shorting. Maybe in one of this rotation now, or in one of this push, it might try to make push for 25k levels. So 25,015 can happen. Why? Because that's where Nasdaq turns green. Right now Nasdaq is the only product which is capable of going green, because Russell actually is also done well. It did not make a new low, right? While Nasdaq, yes, Dow were making new low, but Dow is the one which is the down more than 1% right now. ES follows next, down 0.73.
At 2 p.m. Eastern Time, we have the US interest rate decision and FOMC rate statement, and SEP forecast is for no change, prior 3.75%. Also expecting Fed median rate forecast, with the current forecast 3.375%, prior 3.625%, with a range of 3.625% to 2.875%. Next year forecast 3.125%, prior 3.375%. Next 2 years forecast 3.125%, unchanged for the prior, and the long run forecast 3.125%, prior 3%. Looking at some more research, the Bank of America says the Fed is expected to keep policy rates unchanged at 3.5 to 3.75% at its March meeting, with an 8-2 vote, and Governors Micron and Waller dissenting in favour of a 25 base point cut. The statement is likely to include some reference to the Iran war, most likely by strengthening the uncertainty language around the economic outlook and possibly adding that a persistent rise in oil prices would put upwards pressure on inflation while weighing on economic activity. According to sources, the Trump administration expected to soon lift summer gasoline regulations to curb energy prices.
Uh, 7 more minutes to go, guys. I think I'm just going to wait out next 7 minutes. Do nothing here. Listen to the interest rate announcement. I think there is some comments also which comes out along with the summary of economic projection, right? That is also going to come out. So market is going to react to all those data points. Yeah, especially I don't want to be in a trade when all those data points are coming out.
In 5 minutes' time, we're expecting the US interest rate decision and FOMC rate statement and SEP. Forecast is for no change, prior 3.75%. Also expecting the Fed median rate forecast data, current forecast 3.375%, prior 3.625%, with a range of 3.625% to 2.875%. Next year forecast 3.125%, prior 3.375%. Next 2 years forecast 3.125%, unchanged from the prior, and the long run forecast 3.125%, prior 3%. Looking at some research here, Deutsche Bank says the Fed is expected to keep rates steady, with policymakers emphasizing elevated uncertainty tied to the ongoing Middle East conflict and maintaining the view that policy is already well positioned. Powell is unlikely to give any strong signal or near-term moves, which would leave the Fed on course for a third straight hold at the April meeting. The statement may be adjusted to reflect softer recent labor market data by saying job gains have remained low on average and the unemployment rate has been stable, while also adding language that recent geopolitical developments are highly uncertain and likely to put upwards pressure on inflation while weighing on economic activity.
Yeah, I mentioned that I will be avoiding shorts now. It is starting to grind slowly back up. 25,000 is the target, eventual target. 2 more minutes to go for the interest rate decision and the top of the hour. Staying flat for this news.
One minute remaining. US oil reserves gain trades near $96 a barrel. Excuse me, US oil versus gains trades near $96 a barrel.
Oh, excuse me.
10 seconds. No change, no change. Rate remains unchanged at 3.75%. Fed median rate forecast data, current 3.375%, 3.375% as expected. Next year, 3.125%, 3.125% as expected. Next 2 years, 3.125%, 3.125% as expected. Long run, 3.125%, 3.125% as expected. Fed holds benchmark rate in 3.5 to 3.75% range in 11 to 1 vote. The Fed maintains projections for one rate cut in 2026 and one in 2027. Fed says Governor Micron dissents in favor of a rate cut, and the Fed says implications of Middle East developments are uncertain.
So as suspected, it is no change and the up move, and 25,000 is the
Seeing a little
target
bit of
here.
downside in the dollar off the back of that rate data. So seeing here, Fed policymakers sees 4.4% unemployment rate at the end of 2026 versus 4.4% in December projections. Fed policymakers see end 2026 PCE inflation at 2.7% versus 2.4% in December, and core seen at 2.7% versus 2.5%. The Fed policymakers sees 4.4% unemployment rate at the end of 2026 versus 4.4% in December projections, and the Fed projections show 7 policymakers saw no rate cut in 2026 and 1 sees rates higher in 2027. We have posted the FOMC SEP on the feed for those interested. US stocks paired losses slightly after the Fed statement. S&P 500 last down about 0.6%, and the Nasdaq Composite down 0.5%. And we have posted the FOMC rate statement on the feed for those interested. Spot gold little changed after Fed decision, last down 2.2%, and US stocks paired losses slightly after Fed statement. S&P 500 last down 0.6%, the Nasdaq Composite down 0.5%. US Treasury yields pair increase after Fed statement. 10-year yield last at 1.2 basis points at 4.214%, and US Treasury 2-year yield last up 2.4 basis points at 3.695%. Fed policymakers see 2.4% GDP growth in 2026 versus 2.3% in December, and see longer run growth at 2% versus 1.8% in December. US interest rate futures see 21 basis points of easing in 2026, unchanged from before the Fed statement. US dollar pairs gains briefly versus the Japanese yen, last up 0.2%, and the euro pair losses against the dollar briefly after Fed decision, last down 0.16%, and the US dollar index pairs gains briefly after the Fed decision, last up 0.21%.
Thanks, cool kid. Uh, do we got another punch left, or that's it? This was the only thing which was there with the
According to
FOMC.
data, US rate futures expect Fed to resume rate cuts either in December or January 2027.
Yeah, there was no change, right? They didn't cut or raise rate. That was what forecasted to stay. I think it's the press conference which is little bit more going to be a directional move.
Iran president says infra attack will yield nothing for the US and Israel. So Iran president saying infrastructure attack will yield nothing for the US and Israel. US crude and gasoline futures reverse course and turn negative.
Yeah, we should be able to catch a bid here. Should be able to pop. Not seeing any extreme selling pressure in the tech stocks. Should be able to get back up. Should be able to get back up. Well, it's not happening. Hey, how about staying a little patient? It is just a retest and it is going to dump. Man, you have turned so pessimist today. Be a little bit optimistic. I say you take your profit as soon as it break you and you take your profit and run. Okay, man. You win some, you lose some. If I went in with some thought, let that thought play out. Let the stop loss or the take profit hit. If you make decision based on each single small fluctuating candle, you're never going to get confidence in your trading or your strategy ever. I like your style. I like your confidence. Yeah, that's why you're watching me. So yeah, let's stay positive here. The market has at least found some new lows prior. This is still, building the structure to go back higher. 25,000 is the final destination. Yes, we do have press conference. So ideally, I would like to exit this trade before 2:30. So it's already 2:15. So for that reason, I might take profit early. Else, we could have stayed, especially if it was working in our favor, we could have stayed until 25k happens. But now because of the press conference, we'll have to start wrapping up. Especially if we get green, we'll have to take some profit here. Well, you don't have to worry. Your stop loss is going to get hit. It's okay, man. Let the stop loss hit. Not good. There's something going on. Some news
Qatar
again.
Interior
There's some
Ministry
news.
says civil defense dealing with fire in Ras Laffan area after the Iranian attack.
Some news. Attack news. So let's take a stop. Obviously, there's some news. But still, I'm not seeing selling pressure apart from financials. Tech is okay. Tech is doing okay, guys. Tech is doing okay. I'm going to get back into that same trade. Tech is doing okay. There was some sudden news announcement. For that, it did drop. But tech is doing okay. I didn't see selling pressure. Lot of selling pressure in tech. Financial took a hit. There's no pressure on the tech. So I'm back in the same trade. Targeting similar exits which I had before. Okay. So back in the same trade which we were here, there was some news, attack news and whatnot. Little bit of reaction. Again trying to build the structure to grind and go back up. Could exit 3 contracts. Still long 6 more micros. Can we hold this and push another leg higher? Come on, catch a bit, catch a bit, catch a bit, catch a bit. No, says wait for FOMC. So let's wait for FOMC after this trade. Yeah, let's wait for FOMC now. And 10 more minutes to go. Yeah. ES about to make a new low. ES has pressure, I told you, right? Financials or sector weakness. Tech is still doing fine. Tech may not make a new low. But we have FOMC press conference also starting. So anyway, let's stay with 3 micros while I prepare your video for Powell's press conference.
At 2:30 p.m. Eastern Time, we're expecting the FOMC press conference with Fed Chair Powell. We have posted a live video of the press conference on the feed for those interested.
Voice news disconnected.
So yeah, we are again back under sell pressure. Then why are we long? It's because still I'm not convinced on the tech or Nasdaq. Ideally, we should not be trading this big size just before the FOMC statement, because this trade requires stop loss of this low, previous low. Let's see. That's why I'll try to exit as much possible if we get small green here or pop back into this overhead resistance. This trade for sure requires a stop loss below this previous low. It will be too much of a drawdown for me to take. I already gave back some profits. We are up $1,400 in one of this account. Now it is up 900 minus this another couple of $100. Yeah, the only reason I stayed long was tech was okay on that flush. It was more about again ES sector weakness. Tech was okay, but now tech is starting to get under pressure. Catching a bid, good thing. Should be able to give me exit now. So some news came here, right? We were doing well
In 5
here.
minutes'
I
time, we're
think some news
expecting the
came for
FOMC press
Iran
conference with
attack.
Fed Chair Powell. And a reminder, the video is on the feed for those interested.
There you go. Come on, champ. Go get it. One more. One more. Can it go higher? It can go higher. There was a number in mind we had. Yeah, let's try to wait for Powell. Volatility is now going to be the problem. Even if you get the winner, how you take profit. Before you can take profit, the candle is going to fluctuate fast and stop you before you can move your take profit. Okay, there you go. Finally. Oh man, don't. It's crazy, right? It's crazy how you cannot even book profit in the volatility
expecting
increases.
the
You
FOMC
got to
press
give wider
conference.
room. If you're trading this tight, it's not going to play out with the volatility.
And the press conference has now started.
Where is Powell? Where is Powell? 18 March. Yeah, today.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months, and inflation remains somewhat elevated. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. The implications of developments in the Middle East for the U.S. economy are uncertain. We will remain attentive to risks to both sides of our dual mandate. And I'll have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. In our summary of economic projections, the median participant projects that real GDP will rise 2.4% this year and 2.3% next year, somewhat stronger than projected in December. In the labor market, the unemployment rate was 4.4% in February and has changed little since late last summer. Job gains have remained low. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. In our SEP, the median projection of the unemployment rate is 4.4% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the S&P for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. From last September through December, we lowered our policy rate 0.75 percentage point, bringing it within a range of plausible estimates of neutral.
New low in ES.
This normalization of our policy stance should continue to help stabilize the labor market while allowing inflation to resume its downward trend toward 2%. But the
Voice news
implications of events in the
disconnected.
Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December. As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or decision. Monetary policy is not on a preset course, and we'll make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Thank you. Colby Smith of the New York Times. There's been some debate about whether the Fed should look through the inflation that will come from higher oil prices stemming from the Middle East conflict. Is that the right approach at this juncture? And to what extent does the fact that inflation has been above target for roughly 5 years now influence the committee's thinking around this?
So, first let me say we're well aware of the performance of inflation over the last few years and how a series of shocks have interrupted progress that we've made over time. And that happened most recently with tariffs, and now there will be some effects on inflation coming forward. The thing that's really important that we see this year is progress on inflation through a reduction in goods inflation as the one-time effects on prices of tariffs go through the system, go through the economy. That's the main thing we're looking for going into this exercise. And we need to be seeing that to sort of understand that we actually are making progress, because on net we didn't make progress. And if you look at total core inflation, it's about 3%, and some big chunk of that, between 0.5 and 0.75, is actually tariffs. So we're looking for progress on that. The question of whether we look through the energy inflation doesn't really arise until we have kind of checked that box. It, of course, is kind of standard learning that you look through energy shocks, but that's always been dependent on inflation expectations remaining well anchored. And I think now it's also dependent on what you mentioned, which is that broader context of 5 years now of inflation above target. We have to keep all of those things in mind, and the question of looking through when it does arise will be one to approach not lightly, but in the context that you mentioned.
And just on the S&P, can you help us make sense of why there is still a bias to cut for most officials this year, despite the upward revision to headline and core inflation and the essentially unchanged forecast for growth and unemployment? Just curious, kind of what's the genesis behind the need? What's the need for the cut?
Yeah, so, there are 19 people, and so 19 reasons, 19 individual submissions, and if you notice, the median didn't change, but there was actually some movement toward, a meaningful amount of movement toward fewer cuts by people. So 4 or 5 people went from 2 to 1, let's say, 2 cuts to 1 cut. And each person has individual, stories behind what they want to do. But essentially it is that, the forecast is that we will be making progress on inflation, not as much as we had hoped, but some progress on inflation. It should come as we start to see in the middle of the year progress on tariffs, going through once and then tariff inflation coming down. We should be seeing that. And, the rate forecast is conditional on the performance of the economy. So if we don't see that progress, then you won't see the rate cut.
Thank you, Howard Schneider with Reuters. Just to follow up a little bit and to be clear, is the higher inflation penciled in here for 2026 solely the result of the oil shock or something else?
So that's going to be part of it. But, that wouldn't be most of core, right? So the oil shock for sure shows up here. Some of that will be in core as well. But yes, but no, there's also just the feeling that we haven't seen, the progress that we had hoped for on core goods and on tariffs and on the rest of it. So for whatever reason, people did write up their inflation forecast. That will certainly be tied to events in the Middle East and the price of oil, but it's also, I think, a reflection of the slow progress we've seen on tariffs, which we believe we will see. It's just a question of how long it takes for them to get all the way through the economy, and it just takes some time.
Right. And is the lack of change in the SEPs, again, just to explicate this a little bit, more due to the expectation that the oil portion of this will pass through, or more out of concern that there is a potential blow to consumption and growth coming in the form of wealth effects with the stock market down, in the form of gas prices, diverting spending from other parts of the economy?
So I didn't get the second part of your question.
That consumers are going to be potentially diverting money to gasoline from other parts of the economy. There could be a growth shock or a redistribution of spending there. They can hit consumption, wealth effects as well. I guess I'm wondering, is the rate forecast not changing because you think the oil shock is going to be temporary, or because you want to be sure you're positioned in case growth starts to slow?
So the thing I really want to emphasize is that nobody knows. The economics effect could be bigger, they could be smaller, they could be much smaller or much bigger. We just don't know. So people are writing down something that seems to make sense to them, but have no conviction that to your point, if we have if we have a long period of much higher gas prices, that's going to weigh on consumption. That'll weigh on disposable personal income, and it'll weigh on consumption. But we don't know if that's going to happen. Something quite different than that. We might have much lower than expected pass-through. So people write down, this is one of those SEPs where a number of people mentioned if we were ever going to skip an SEP, this would be a good one, because we just don't know. So I wouldn't say there's a conviction that this is going to go through quickly or not quickly. It's just you got to write something down, and this is something that is that people wrote down. So we don't debate how long. How do you do that? We wouldn't be able to debate what the length of or size of these effects would be. We just have to kind of make an individual statement. And also, what you've written down before you'll be reluctant to move too far away from that, just because you don't know. It's so unclear what the direction from this particular end will be. Meanwhile, the growth has been solid, and inflation, the overshoot is mainly from the goods and tariffs. And, the labor market is, the unemployment rate, of course, is little changed since September. You have a very, very low break-even rate, apparently, for new jobs, with little growth in either demand or supply. But the U.S. economy is doing pretty well. It's just we don't know what the effects of this will be, and really no one does.
Mr. Chair, in the past, the staff has suggested that higher oil prices, they have a hit to consumption, which Howard was talking about, but that's somewhat offset by increases to domestic production. I wonder if you could talk about that dynamic, especially to the extent that how much U.S. production is happening right now.
So the first thing is there is, the original thinking, the long-standing thinking, put it that way, is that you do look through energy shocks. But as I mentioned, that's conditioned on inflation expectations and that kind of thing. So, sorry, your question was?
What the staff is saying about, and has said in the past.
Yeah. So there'd be an offset.
Offsets, yeah.
So that's true. We have, we're a net exporter of energy, right? So any effects on employment and economic activity and spending would be offset to some extent by the fact that our oil companies will be more profitable and they may even do more drilling. If you ask oil companies about doing more drilling, though, they're going to want to see, a consistent rise in oil prices from where they were before the buildup for the war, and they're going to want to believe that that's going to be persistent for a fairly long time. So they're not sitting there waiting for oil to go over $70 a barrel, and then they're going to start drilling or whatever. They're going to make a reasoned, careful judgment that we're going to have higher oil prices for an extended period, meaningfully higher. So I wouldn't say there's much of that happening. Not much of it happening now, but some of that could happen over time if you see that. But so the net of the oil shock will still be some downward pressure on spending and employment and upward pressure on inflation, of course.
And if I could just follow up on Colby's question, how much do you worry that having looked through tariff inflation and inflation running above target and looking through the oil price shock would undermine the credibility of your commitment to the 2% target?
We have to do our analysis and think these things through carefully, but of course that's on everyone's mind. We're well aware of the history, but you don't want to overreact to that. You want to make the best judgment you can based on the facts. I don't think we're going to let it color our decision making more than is appropriate. It's more the thought that it's been 5 years, and we've actually had we had the tariff shock, we had the pandemic, and now we have an energy shock of some size and duration. We don't know what that's going to be, actually. And it's one of those things where it's a repeated set of things, and you worry that that's the kind of thing that can can cause trouble for inflation expectations, and so we worry a lot about that, and we are very strongly committed to doing what it takes to keep inflation expectations anchored at 2%. And I think it's important that we do that. Very important.
Nick.
Nick Timmeros, The Wall Street Journal. Chair Powell, you've described monetary policy as modestly restrictive. If the unemployment rate is roughly stable, inflation moving sideways in the high twos, with an ongoing overshoot in services and non-housing services, not just goods, and the economy doing fairly well, as you just outlined, what gives you confidence that inflation returns to target over the next couple of years?
Okay. So I would say the rate is, you can characterize it as in the high end of neutral, or you can characterize it as perhaps mildly restrictive, even modestly restrictive. No one knows for sure, but it's in that range where it's somewhere around the borderline between restrictive and not. Remember that a big part of the disinflation we're looking for is just the runoff of when tariffs are put into place. Of course, what they do is they raise prices to some extent, to the extent those prices the tariffs are paid by consumers on a one-time basis. And we're waiting for that process. It takes 8, 9, 10, 11 months, a year to go through the system. And we're waiting for the tariffs, which were put in place over the course of the middle part and later last year. We're waiting for that to go through the system so that goods inflation will return closer to what it's always been. I mean, it used to be, for many, many years, it was negative. And then, the year before tariffs came in, it was 0. And it's running at like 2% now. So, and so that's kind of, goods inflation is running at 2%. So that's not coming from standard Phillips curve restrictive, restrictive policy. It's coming from the runoff of a one-time thing. We also think it's important, though, to keep policy, either mildly restrictive or close to that, but not too restrictive because of the weakness in the downside risk in the labor market. We are balancing these two goals in a situation where the risks to the labor market are to the downside, which would call for lower rates, and the risks to inflation are to the upside, which would call for higher rates or not cutting anyway. So we're in a difficult situation, and we feel like our framework calls on us to balance the risks, and we feel like where we are now, which is kind of on that borderline, the higher borderline of restrictive versus not restrictive, we feel like that's the right place to be.
Can I ask about core non-housing services, though? Because there are some people who think that it hasn't come down very much, if at all, over the past year. If wage growth has come down, if the labor market has loosened, why has non-housing services inflation maybe been slower to follow?
That's a good question. It's frustrating. Non-housing services they basically moved sideways for a year. They're at the same level, and we do expect that they will come down. But it's a bunch of idiosyncratic things. But at the same time, that is one of the things we should be seeing, because to your point, the labor market is clearly not a source of inflationary pressures, and that should really matter for non-housing services, but we're not seeing progress there. So we do, what we expect for next year is what we want to see for this year, rather, is continued progress on housing services, finally seeing that, the goods inflation come back down because the one-time effects of tariffs are through, and then also get some help from non-housing services. That's what we'd like to see. But it's a good question why we didn't see much of that last year.
Edward.
Thanks, Chair Powell. Edward Lawrence with Fox Business. So in December, we saw employment numbers revised down to negative 17,000. January revised down. February posted a loss of 92,000. Is the employment side a far greater risk than the inflation side? Because we are seeing inflation. CPI is close to 2%. PCE has ticked down overall.
It's really, I wouldn't say that. I wouldn't say that that's clear at all, that one is more at risk than the other. So you can point to the unemployment rate being stable, and, in a world where both supply and demand for workers have come down very, very sharply over the course of the past year due to immigration policy largely, a ratio is going to be a better thing to look at than job creation, for example. So, and the ratio is the unemployment rate, and it's been stable since September. So that tells you that. Inflation, you can. We're at 3.0% core. Inflation 2.8% headline. So we've been well above the 2%, that amount, whatever it is, 0.7, 0.8, or a full percentage point above 2% for some time. And that's a concern. We need to get back down to 2%, and we need to keep focused on that, even though we do now face some new inflation from energy. So I'd be hard-pressed to say that one of them is obviously more at risk than the other.
And if I may, what happens if there's no Federal Reserve chairman confirmed on May 15th? Would you stay on?
So if my successor is not confirmed by the end of my term as chair, I would serve as chair pro tem until he is confirmed. That is what the law calls for. That's what we've done on several occasions, including involving me, and it's what we're going to do in this situation. And while I'm at it, on the question whether I will leave while the investigation is ongoing, I have no intention of leaving the board until the investigation is well and truly over, with transparency and finality. And I would refer you to the statement that was in the Fed's brief that you will all have seen, and I won't have anything more for you on that. On the question of whether I will then continue to serve as a governor after my term ends and after the investigation is over, I have not made that decision yet. And I will make that decision based on what I think is best for the institution and for the people we serve. Figuring you probably were going to set the dominoes off there, Edward. And I'm not going to have any more to say on those issues, by the way.
Thank you very much. Claire Jones from the Financial Times. People have drawn quite a few historical parallels with the current situation. We've seen oil price shocks in the past. Some people have said the first Gulf War and the Fed's response to that, where there was a focus on the growth risks, is the right parallel. To what extent would you agree with that, and to what extent do you think we're in a different place today? Thank you.
It's really hard to say until we see the situation, the actual situation. In some circumstances, that might be the right case. In fact, for example, if we do see the kinds of disinflationary progress that we expect to see due to tariffs that I mentioned, I think it's hard to say, and it will depend to some extent on the size and duration of the effects we're seeing on prices, and it will depend a lot on what we can see in inflation expectations.
And just one follow-up, if I may, just on the BLS report that was mentioned briefly there. It doesn't seem from the projections or from the comments you've made today about the unemployment rate and focusing on that your view on the labour market story, to a large part being a supply side story, has changed despite the quite negative number in February. Would that be the right take, and was there anyone else in the room who thought differently and that the February jobs report was cause for concern?
So I think you have to take the two together. You know, in a way, the January report was a positive surprise, and the February report was a negative surprise. If you put them together, you get something in the middle, and I think you have to really, as you do, I'm sure, realize there was a strike and there was weather, and that's about 80,000 of the negative effect total on the February report. Notwithstanding that, so what do you see if you take a step back overall? There are a number of indicators that suggest a degree of stability, but the thing that I think good number of people on the committee are concerned about is just the very, very low level of job creation. If you adjust what has been the trend job creation over the past, let's say, 6 months, if you adjust that for what we think, our staff thinks, is the overstatement due to overcounting, effectively there's zero net job creation in the private sector. But actually that looks like that's about what the economy needs in terms of dealing with very, very low, non-existent really, growth in the labor force, which of course we've never had in our history. So you've got a sort of a zero employment growth equilibrium. Now that's balance, okay, but I would say it does have a feel of downside risk, and it's not kind of a really comfortable balance. So we look at that, we see it, we get it, and I mean everybody understands the arithmetic, and that's you can say the break even is zero, but nonetheless it's something we're watching carefully, and are concerned about. But ultimately, though, you can argue that it's a consequence of deliberate policy, which is really the changes to immigration. That's the biggest factor there, and but nonetheless something we watch carefully.
Andrew.
Thanks, Chair Powell. The economy's experienced a series of supply shocks in the last few years, COVID, tariffs, 2 oil price shocks. Do you think that is bad luck, or has something changed in the world that makes supply shocks more common, and does the central bank need to start taking account of the risk of supply shocks as a more common problem?
We did go through a long period where the shocks were all demand shocks, and so we've had a lot of practice thinking about supply shocks in the last 4 or 5 years for sure. And it's just a very different thing, and a very much more difficult thing, because it does immediately raise the question of tension between the two parts of our mandate. But has the world changed? I mean, COVID is a one-time thing, right? This energy supply shock is a one-time thing. It's not because of some broad tendency or anything, I don't think. And the oil shock with Ukraine was also a consequence of military action. So I don't know that the world has changed in a way that there'll be more supply shocks. But there's people have written that paper and that speech a number of times. A number of people have tried to make the case that is the case. And in fact, we have seen more supply shocks in the last 5 years than we've seen in many years before that. It's a fact.
Okay. You said last year that the Fed was reviewing its communication strategies, including the SEP, as part of its framework review. Whatever happened to that? And I have like 5 follow-ups to that, but I guess, what would you change about Fed communications if you had the time? Thanks.
What happened about that was not much, and I'll tell you why. So, we looked carefully at many aspects of the SEP and of our communications, and there weren't any ideas that had very broad support on the committee. And you don't want to make a change to your communications unless you have the committee behind that. So we didn't really make any changes on that. I had hoped that they had some things that I wanted to do, but they didn't attract broad support, and we'd already made all the changes we made to the framework. That was a critical thing. So we didn't. And, I wish we had been able to do some things, but we didn't. So maybe the next chair will take a look. I'm sure he will.
Michael McKee from Bloomberg Television and Radio. The minutes show in January some members of the committee wanted to include a two-sided guidance on policy. Was that discussed today? And given the rise in the inflation expectations, how much support for a two-sided policy warning would there be?
So it did come up today. The policy that the possibility, rather, that our next move might be an increase did come up at the meeting, as it did at the last meeting. The vast majority of participants don't see that as their base case. And of course, we don't take things off the table. But you correctly characterized, what was in the minutes that several participants indicated, and something very much like that conversation did happen. What was your second question, though?
I was just one question there, but follow-up would be, there are a lot of goods besides oil that are trapped in the strait right now, and a lot of supply chains getting snarled. How much concern do you have about whether, if this becomes an inflation problem beyond just oil, whether there's anything you can do about it or would do about it, given the efficacies of monetary policy?
You can worry about other commodities. You can worry about all of the ways that oil-related commodities go into manufacturing and that kind of thing. The truth is, it's completely out of our hands, and we just, like everybody else, we have to just wait and see what happens, and it'll come down to how long the current situation lasts, and then what are the effects on prices, and then how do consumers react and that kind of thing. Really, I wouldn't speculate in any way, and there's really not a lot we can do other than kind of watch and see.
Afternoon, Chair Powell. Maria Luisa Capurro with Bloomberg News. I wanted to ask you, you've said longer-term measures of inflation expectations reflect confidence that the Fed will get back to its 2% goal, but there are some colleagues of yours who have pointed to higher dispersion in household service, in business services as well. So, and that they take as a signal that inflation expectations may be less sticky than in the past. I'm wondering if there was a discussion around that at this meeting across the committee, and what were the views of what is the state of inflation expectations and the risks from higher oil and gas prices.
So at this meeting, I mean, a number of people mentioned and staff briefed on short-term expectations having moved up quite a lot for reasons we understand well. But long-term expectations, you can always find one that's troubling or some aspect of one that's troubling, but ultimately, right through this whole period, the overwhelming majority of the things we look to, including markets, including surveys of the public and also of forecasters, they've all been pretty solid on longer-term inflation expectations being right where they need to be, consistent with 2%. So that continues to be the case. We didn't have a lot of conversation about that. I think everyone does agree that we'll be watching those extremely carefully as we see the effects of the price increases come through from the conflict.
And still on how the discussion went across the committee, before coming to this meeting, there were some members who were discussing the risks of a slowdown in growth and at a time of where inflation remains high. It really doesn't seem that most members are penciling in a slowdown in growth.
No.
But has there been any discussion of the risks of stagflation at this point?
So people actually wrote up their growth forecast by a tenth, and I think that's probably to do with just growing confidence in productivity. But sorry, and your second question was just.
If there have been any discussions about the risk of stagflation scenario.
Yeah, so as I mentioned, there is tension between the two goals, right? The upward risk for inflation and downward risk for employment. So, and that puts us in a different situation. When we use the term stagflation, I always have to point out that That was a 1970s term at a time when unemployment was in double figures and inflation was really high and the misery index was super high. Add them together, you get the misery index. And that's not the case right now. We actually have unemployment really close to longer run normal, and we have inflation that's 1 percentage point above that. So calling that stagflation, it's not. I would reserve the term stagflation for a much more serious set of circumstances. That is not the situation we're in. What we have is some tension between the goals, and we're trying to manage our way through it. It's a very difficult situation, but it's nothing like what they faced in the 1970s, and I reserve stagflation for that, the word for that period. Maybe that's just me.
Elizabeth.
Thanks so much. Elizabeth Schulze with ABC News. President Trump says that oil prices and overall inflation will go down very rapidly as soon as the war ends. Do you agree with that?
I don't have a forecast on that.
When we're thinking about the impact on American households, as you know, they've been facing these higher prices for years. They've seen an almost $1 increase in gas. How worried are you about households, especially lower income families, being able to afford those price hikes? And should people be bracing for higher costs, including for food now?
We don't know how big these effects are going to be, and I don't want to characterize them in any way. Of course, people are already seeing gas prices. Gas prices are up almost $1 a gallon. We hope that isn't for a long period of time, and of course people will feel that, but I don't want to speculate about what that might mean, because honestly that would sound like I have some idea of what's actually going to happen, and I don't think anybody really does. We're going to see how this works out, and I just would leave it at that.
Victoria.
Hi, Victoria Guido with Politico. I just wanted to ask, for purposes of the next meeting, how the Middle East war develops between now and then, how are you thinking about what might guide action at your next meeting? I mean, if we have oil prices, above $100 a barrel the entire time until the next meeting, is that going to change your wait and see stance? Like, what would lead you all to move, or are you on hold pretty indefinitely?
We'll have to wait and see. I mean, we always say we're going to learn more by the next meeting, and usually we do, but in this case we're going to learn a lot, because we're going to learn 6 weeks to the day till the next meeting, and we're going to see whether what happens is it's going to be very important for the way the economy looks and the way the outlook evolves with what happens in the Middle East. That's going to be a big factor, and we'll know that then. I don't know how it's going to affect our thinking. I really don't. And we did talk about alternative scenarios a little bit, but it's just, I wouldn't bring that in here. It's very uncertain, and I just want to remember that we don't know, and we shouldn't assume it's going to be one thing or another. We're going to see.
So is it a matter of you don't know how the situation itself is going to evolve, or even if things remain as they are, the economy could still remain relatively durable in face of them?
Yeah, that's true too. No, I mean, the U.S. economy has just, made it's been strong through a whole bunch of challenges. I mean, if you go back to 2023, when we raised rates a lot in 22 and 23, and close to 100% of economists called for a recession, which didn't happen. In fact, 2023 was a really strong year. So the U.S. economy has really been just doing pretty well through a lot of significant challenges over the past few years. It's been amazing to see. And I don't know what's going to happen in the next intermeeting cycle, and I don't know what's going to happen in the Middle East. I wouldn't want to speculate.
Hi, Chair Powell. Thanks for taking our questions. What makes you so certain that tariff-related price increases will be a one-time effect? I don't think we've seen you since the Supreme Court tariff decision, and it's pretty clear that none of us know what the extent of the tariff shock will be as the administration moves to replace some of the tariffs that were overturned. So I suppose I'm curious, what would make you question this certainty that tariffs are going to be a one-time price effect?
Well, I would not at all use the word certain about my views on that. I'm not certain. I'm uncertain. But just if you think about what it is, it's a one-time increase in the price of a good, right? And what inflation is, ongoing increases in prices this year, next year, the year after. That's what inflation is. It's not a one-time price increase. There's a very, very big difference. The public doesn't really focus on that, but that's the difference. And tariffs should be in theory, unless they cause people to start expecting still more tariffs the next year and still more tariffs the next year. They should be a classic one-time thing. People say the same thing traditionally about an energy price spike, because traditionally prices go up and they come back down. And by the time monetary policy would react, it would be over. So I don't have tons of confidence on that. I mean, I think the theory is probably right, but as usual, the time it takes to get all the way through the economy is just very uncertain. And we found that coming out of COVID, that the inflation did go away, and largely for the reasons we thought it would, but it took 2 years longer than we thought. So I think we have to be humble about knowing how long it will take for tariffs to go all the way through the economy. And so what we've been doing is, our staff's been doing, it's very interesting. They started off with just an estimate because there wasn't a real history, and then they've built, based on the history that they're seeing of tariffs coming through into prices, they can now have an arc, and for all the tariffs they can say, well, so we have, I think, a slightly more confidence that we will see tariff inflation coming down, not prices, but you won't see further increases, and we should start seeing that more and more in the middle parts of the year. We do expect that. Now, you're also right, though, that the level of tariffs came down fairly meaningfully in the wake of the court decision. But the administration said they're going to get that rate right back up to where it was. So, and we assume that they'll do that over time. So that's how we think about it.
Thank you.
Hi, thank you. Chris Rugaber at Associated Press. You talked about the shortcomings of the SCP in this environment. I wanted to ask about, or throw in an additional thing, which is the fact that it's happening before transition. Is there still some value, perhaps, in the public knowing what other Fed officials are thinking, the ones who will stay on for the rest of the year and beyond? And does that even handicap your successor in any way? Well, just in terms of having a whole committee expressing its views, is that something that locks them in for the rest of the year?
No. We never. The SEP is never. People are more than happy to change their SEP dots. They're no way bound by them. It's your opinion at a moment in time, which can change based on events. Sometimes very quickly. So it never locks people in. People are more than happy to be proven wrong in either direction, and so I just think we do it. And I mentioned this was a time when it's very hard to do it. During the pandemic, we actually took one meeting off, I think, but we don't like to do that just because it's hard to do. We should just keep doing it. But I just would say for this one, though, I think it's even more than usual good to take the forecast with a grain of salt, because subject to just very high levels of uncertainty.
Hi, Chair Powell. Brian Chung with NBC News. So you mentioned at the beginning of this conversation that you're well aware of the history of inflation running above target. It seems like that might be what's underpinning the affordability problem that we're hearing a lot about on Main Street. Are there any signs to you that that's impacting the psychology of the consumer, especially given that they're a big driver of overall economic activity?
I'm not sure what that's all about, but I'll tell you what I think and what we see in surveys, and that is, there were big price increases all around the world, by the way. Everywhere in countries like the United States had basically the same kind of thing. It was a global inflation coming out of the pandemic, and everywhere people are feeling like real wages have been going up in the United States now for 3 years, roughly. But people are not feeling good about it yet, and it will take some years of positive real earning gains for people to feel good again, we think. But you're right. But when you talk to people, they do feel squeezed, and there are areas where prices are still going up, like insurance. Various different kinds of insurance are getting more and more expensive, and that's just catching up really from inflationary pressures that take a while to get to the price, into the price. So we take it very seriously. We don't dismiss it at all. It's a very real thing from the standpoint of what people are experiencing, and you know, what it does for us is, you know, makes us even more committed, if that's possible, to getting inflation back to 2% on a sustained basis.
How does the Fed's independence play into the ability to address affordability?
Well, independence is what allows us to do our jobs, and you know, stable prices is half of our mandate. It's one of our two mandates, maximum employment being the other. I mean, look at every advanced economy that looks anything like the United States, anywhere in the world, in a market economy, in a democracy, and you'll see, you know, pretty much central bank independence that looks a lot like, in some cases, stronger than what we have. But it's critical that we have that so that we can do the things when we need to do them to preserve price stability. And it's an accepted standard practice, and I think has a lot of support, certainly in Congress, which is where our oversight is in Congress. And you see that among Democrats and Republicans in the House and the Senate.
Hi, Chair Powell. Richard Escobedo at CBS News. Thanks for doing this. Two questions. One, how high would oil prices and broader inflation have to go, and for how long, for the committee to consider hiking rates? And then secondly, diesel prices are rising faster than gas prices. How concerned are you that the increase in diesel might drive up food and goods prices and lead to broader inflation?
Yeah, I'm not going to give you an example or a specific answer on the first question. You know, we're prepared to do what needs to be done, but I wouldn't want to hypothesize about what that might be. You know, in terms of diesel prices, so your question there is, are we concerned about it? I mean,
how concerned, and whether or not it will drive up, you know, the cost of food and other goods that really rely on it to
so
move
I think
across the country.
it's a more general concern than that. It's diesel prices because that's transportation of food and things like that. There are just lots of ways that oil and derivatives of oil get into the production and transportation of many things. So, and those, there are big effects in headline inflation, but things like that leak into core as well. And the effects may not be as big, but they're quite real and they're material. So we are aware of that and we're watching it, but you know, we're right at the beginning of this, and we don't know how big we just don't know how big this will be and how long it lasts. You know, it may or may not be something that really makes a big imprint on the U.S. economy. We're just going to have to wait and see.
Thank you.
Archie, for the last question.
Thanks very much. Just to sort of stare into the future for a little bit, I was looking at the longer run bits of the S&P and noticed that the growth estimate had been revised up a good chunk from 1.8 to 2, and the kind of long-term Fed funds rate as well. It'd be great just to hear, is that AI productivity or what's going on there exactly?
Yeah, I think it's just productivity. You know, we actually started seeing meaningfully higher productivity some years ago, 4 years ago, 5 years ago. And that's not because of, you know, generative AI. We won't know for years what it's really due to, but it could be due to the kind of things that people did during the pandemic to economize and somehow become more productive because there was an incredible labor shortage. But I think economic forecasters are very skeptical of periods of high productivity because they're so rare and they're often revised away. And for many of us, I never thought I'd see this many years of really high productivity, and by the way, expect it to continue. And we haven't really started to see the effects of generative AI, and that should certainly contribute to that. So it's quite unusual, and it's this is the higher productivity is the thing that allows incomes to rise over time. And so it's a great thing. Was that your question?
Yeah, no, I was just curious what lay behind that. And just briefly on that as well to finish up, you hear the argument a lot, this is a sort of disinflationary story, and if you believe that productivity thing, that should also weigh down inflation over time, maybe then kind of pull down where rates end up. Do you kind of agree with that line of thinking, or do you think that's not how you should think about where the rates
I think you have to be cautious about that, in particular if you're talking about AI, about generative AI. So remember, in the short term, what's happening is we're building data centers everywhere, and that's actually putting pressure on all kinds of goods and services that go into building these things. So that's actually probably pushing inflation up at the margin. In addition, it probably raises the neutral rate. So in the near term, you're not looking at something that would immediately call for lower rates or that would be lowering inflation. Over time, though, sure, it can be if it's expanding potential output, which is what higher productivity does, then it actually can be. But I think it's an empirical question because it's really is the demand growing faster or slower than the supply side? And I think we just don't know that answer ex ante going in. We'll just have to wait and see. Thank you very much.
Yeah. Let's see. My volume would be a bit higher. Okay, hopefully it's not too loud. Just confirm, guys. Volume. I had increased it a lot for Powell's conference. It's usually low from their YouTube channel, I think. It should be fine now. It's good? All good? Okay. Yeah, we got one good winner there. I mean, to be honest, there is still room on the downside, but it's risky. It's risky to short for that small room on the downside. Yeah, Nasdaq can go into 600 also. It is possible. So we'll take a loss in case it breaks this, 700 zone. We'll take a loss because it can easily come into 600. We know the reason. That's our midpoint. But will we have enough time? It's already 320. That's the big question. Double bottom, guys. Yesterday's low is right over here. Okay, Nasdaq has a double bottom. This is yesterday's low. So it's okay to give it a shot. We have wiggle room. I cleared any losses I had previously. So yeah, I can take a small loss here and there. Not a problem. Russell also coming into the midpoint along with ES. Yeah, the worst case here is ES doesn't do anything at the midpoint and Nasdaq goes into the midpoint. Then obviously I think we'll lose this trade very badly. So ES into midpoint, guys. I don't know, still few ticks left. 88, 85, 3 more points left. You have to trade the small size with the volatility. Even if the trade is going to play, before it works in your direction, the stop loss will hit first. You have to trade the right size. Like I am right now, size little bit bigger on this trade, but it's okay. We am, and I have 150k account. So man, relying on ES is always dangerous. Like it really can test your patience. ES never, finishes the job quickly. So ES has relying on ES to hit the midpoint and give us a reversal. ES is taking its own sweet long time. Just freaking last 2 points. It is 10 MNQ, yes, equal to 1 NQ, you're right. But your price is not showing relevant. What do you mean by price is not showing relevant? Yeah, that's point. That is not price. I'm not focused and concentrated on dollar. I'm interested in how many points It's going against me. Those are Nasdaq points. It's the same thing, different price value you convert. No, yeah, I don't understand your question properly. Maybe you can elaborate more. First time opening an account with Apex. I bought Trader at end of the day trail. I have to wait for them to send me a code to use in Trader, or how do I start from now? You can go to Apex dashboard. You will be able to read your credentials from there. There will be separate credentials like login and password for Apex Rhythmic account. There will be separate login and password for Trader account. And once you copy, paste, or bring your Trader credentials, you will use this link. I'll share the link in the chat. You just need to log in. You should be able to see your account inside this Trader platform. So trader.traderweight.com. On this, you'll enter the username and password, and you'll see your account. My daughter is waiting. I had to leave, but I have this trade on in other accounts also. That's why I'm waiting, making her wait. But yeah, this is man, ES is always boring. It never gets the job done. It has freaking like last 2 points left. It looks like it is going to bring into end of the day for last 2 points. Yeah, on the Apex dashboard, you'll see. Yeah, on the Apex login portal, there will be credentials. Yeah, just log in, you'll see. Just browse around, you should be able to see username and password there. Just tell her blah blah blah. Life is hard. Yeah, I know she'll understand. Oh man, like ES. That's why I always bitch about ES. This is the reason, right? It has one job, right? Just get the fucking like last 2 points. Let's just get the last 2 points. The problem is, if it reverses here, it is going to be bad. If it reverses, then we are going to get a very small tactical bounce, and it is going to come and crash through it. That will be dangerous. Like if Nasdaq goes for that low, it will be dangerous. So nice timing here. Double bottom in the Nasdaq, and ES gets the midpoint. It's a very good setup. It's a setup worth blowing an account. People like that, right? Whenever I say that, they punch in that same trade. This is the setup where I will prefer blowing an account. I can make my daughter wait a few minutes. Oh my god, gives me the confidence. Punch long. 8 hands of octopus, long. He said that. He said it is the setup worth blowing an account for. Oh my goodness. But the problem is ES, guys. At the same time, take it with pinch of salt. Problem is ES. Like this is not good. I don't want this kind of a bounce. I don't want this bounce. Don't do this. Don't do it. This is not a good bounce. We want this bounce. It should have been to the penny here, from here, not from here. This is bad. This is bad. This is good. So this is bad. Come get it done right now itself. So that's why I'm saying, right? I prefer like little bit more drawdown here actually. The job should be done perfectly. If it is done perfectly, then we have a good reversal. Else, we continue our bitching part on the ES. I hate ES. ES never completes the job. We can never rely on ES. ES always, disappoints you. So yeah, guys, not a good sign here. For few points, we cannot miss that, which means we are going to come back again. So try to exit here if it gets a pop. Try to exit as much as you can. There is a problem. ES is our problem, Mr. Problem. We have a problem with ES. Not a good thing. That one time when the trade is working and the trader is unhappy. I don't want this to go up right now. Anyway, we'll see. Tactical, be a tactical. Yeah, they left a gap. That's not a good thing. That's not a good thing to do. Because the next rotation, they are not going to stop there then. No, I think I'll not make my daughter wait. Maybe I'll leave stream on. News, let me switch on the news. We'll use maybe wider stop loss. And I'll come back in 15 minutes. I'll drop her and I'll be back. Yeah, let's do the right thing. Let me not make my daughter wait. So we'll use little bit wider stop loss. And we'll take a bet that midpoint will not happen. And we'll go for master's exit 800 and then 860. Okay, so news is on. You guys watch. It's okay. You can see me lose that account. But if it works, I'll be back. I'll be back in 15 minutes. Okay. I don't have time to set the message also. If someone is so concerned, you can answer in the chat on my behalf that he will be back in 15 minutes. So see you guys in 15 minutes. The news is on. Should not be a problem for you guys. See you in 15 minutes. Bye.
Iran's Fars reports LNG refinery in Bahrain targeted and damaged. Fars News reports that attack on LNG refinery in Bahrain is still ongoing. So again, Iran's Fars News reports LNG refinery in Bahrain targeted and damaged, and the attack is ongoing. Saudi Arabia said it intercepted 4 ballistic missiles launched towards Riyadh. Parts of the missiles fell near a refinery south of Riyadh, according to state TV. According to security sources, US diplomatic facility closed in Baghdad airport targeted with Katyusha rockets. Sirens heard from facility. 1 minute to go now to give the market and close imbalance data. Ten seconds. Market and close imbalance. S&P 500 buy side 643 million. Nasdaq 100 buy side 634 million. Dow 30 buy side 145 million. Maximum buy side 239 million. Spot gold falls over 3%. As a reminder, we do have earnings from Micron Technology reporting their Q2 2026 earnings, EPS estimate of $9 and revenue estimate of $19.74 billion. Swiss franc falls 1% against the US dollar, the weakest since January. US 2-year yields extend climb to the highest since August. One minute to go now until we expect the US to take long-term transactions with a prior of 28 billion and overall net capital flows prior 44.9 billion. And we give the New Zealand Westpac consumer survey prior was 96.5. And of course, less than a minute to go till we get Micron technology earnings. I'll lead with the US tick long-term transactions. Ten seconds. $15.5 billion, $15.5 billion. Overall net capital flows minus 25 billion. Just waiting on Micron Technologies data to come through. Japan's US Treasury holdings was at $1.225 trillion in January versus $1.186 trillion in December. China's US Treasury securities holdings was at $694 billion in January versus $684 billion in December. The UK's US Treasury holdings sits at $895 billion in January versus $866 billion in December. Micron earnings coming through now. Adjusted second quarter revenue $23.86 billion, a beat on the estimate of $19.74 billion. Also, second quarter cloud memory revenue $7.75 billion, automotive and embedded revenue $2.71 billion, second quarter mobile and client revenue $7.71 billion, core data revenue $5.69 billion. Second quarter cash flow from operations $11.9 billion, a beat on the estimate of $8.93 billion. Micron sees third quarter adjusted revenue $32.75 $32.75 billion, $34.25 billion, bid on the estimate of $23.66 billion. Also, Micron Technology adjusted EPS coming in at $12.20. That's a beat on the estimate of $9.
I'm back. I see no luck today. No
Micron
bounce.
sees third quarter adjusted EPS to $18.75 to $19.55, a beat on the estimate of $11.29. They see third quarter adjusted gross margin about 8.
You can see, right, we suspected that, like if it is trying to go up before this happens, right, most likely when it comes it is not going to stop. The good part was at least there was a break, a retest. If I was around, I could have managed the position. I could have, like, added some and tried to take out some, but since I was not here, the retest rejection happened. Alright guys, so I'm going to call it here a day. It's okay, 1500 drawdown, I can live with that. Most likely I gave back this profit. So anyway guys, I'm going to close 1800 now. Maybe I get green candle and I'll close it. Thank you so much guys for your time. Yeah, if I was around, I would have managed this position differently. I would have taken some profit here on that pop, retest and then rejection. Now Nasdaq, I think as suspected, it is headed into 605. Let's see a green candle. I might close this. Maybe small retracement back up. Alright guys, let's close. I don't think after hour it is going to move much. There is a little bit of bid in Micron going up 2%. Semiconductors were okay today actually. Alright, let's close this. Let's call it a day guys. Thank you so much. I'll see you back tomorrow. I'm just going to bring my stop loss and let it hit the stop loss. Thank you guys. See you back tomorrow. Take care. Yeah, this is the only loss we will be taking. Otherwise, we don't have any red. This one, 1700, whatever, is going to eat into these profits. Others will stay safe. Let's close that. You can see, right? Others, they stayed safe. Only that account got hit. Take it easy, guys. Take care. Bye bye.